Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin. We're going to be talking about three time frames, the weekly, daily and the 15-minute time frame, one bullish, one bearish scenario per time frame, and we talk about the probabilities during the analysis and summarized at the end of this particular video so you know what the highest probability scenario is. Starting on the weekly time frame, where we are looking for an impulse to the upside, a wave 1, 2, 3, 4 and followed by a wave 5 to the upside. The most common target for your wave 4 is between the 0.236 and the 0.5 Fibonacci, taken from the low of 2 to the high of your wave 3, giving you a target between 57.1k and 42.8k. The invalidation for this scenario is the 0.618 at 37.7k. What we like to see is a wave 4 of a higher degree, being the yellow wave 4, retrace to the wave 4 of a lower degree, which is the green wave 4. And we do have overlap between the high of this wick and the low of the wick that we have created. So again, that's something we like to see, and it happened once again on the chart. Currently, the target for wave 5 is between 81.3k and 129k. The bearish scenario, which is a lower probability scenario, is a three-wave corrective structure in an A, B, C or WXY. It doesn't really matter what we get, we expect a bigger three-wave move and continuation to the upside, where the minimum target for your wave Y would be 30.4k and for a wave C would be the low here at 15k, but I am aware that with the mining stuff going on in Bitcoin, moving below 15k is incredibly low probability, so I'd say the minimum target for a more bearish scenario is 30.4k, but this is not the highest probability scenario. For this to increase, we actually really need to take out 38.5k. On the daily time frame, the higher probability scenario is the bullish scenario, where we are looking for a three-wave corrective structure and then a continuation towards the upside. Here we're looking for a zigzag 535 leading diagonal in wave A, 3-wave B, 5-wave C to the downside. The common target for your wave C is between the 1 and the 1.618 trend-based subextension, taken from the start to the end of A to the end of B, 52.6k to 41.9k, and the most common target for your wave C is the 1 to the 1.236, which is at the moment nicely respected, 52.6 to 48.5k, and we also had some nice additional support in this area. The white box over here has been tested 49.1, 49.7. To the downside still we have some more support, 44.3, 45.2k, and the main resistance to the upside here sits between 58.8 and 60k. Passing this resistance and the probabilities increase to move to the mid 60ks. The bearish scenario on a daily time frame, which has a lower probability, is a impulse to the downside, where the leading diagonal here is then counted as a wave 1. Followed by a 3-wave 2 and continuation down in a wave 3, where you easily want price to move to the downside below 38.5k. What lowers the probabilities for this scenario is that your wave 2 hit the 886 Fibonacci, taken from the start to the end of your wave 1. The 886 is a very rare target for a wave 2, but it is a common target for a wave B or a wave X, increasing the probabilities that anything that comes after an 886 touch is corrective in a wave C or Y, and therefore it increases probabilities to then sooner or later move back towards the upside to take out the highs. If we then go to the lower time frame, then here we are looking for a 3-wave structure or 5-wave structure to the upside. Both of these are actually in sync. We have a leading diagonal to the upside in a wave 1 or a wave A, followed by a 3-wave corrective structure in 2 or B, and then we look for a wave C or 3. An ABC would be bearish, because after an ABC you look for a move down. A 1, 2, 3 is bullish, as you look for continuation to the upside. However, the price action is actually similar, 1A, 2B, 3C. And then you get a 3 continuation or a move down. That depends on the second leg towards the upside. The most common target for your wave 2 is the blue box here between the 0.5 and the 786 Fibonacci taken from the low to the high of your wave 1. That gives you a target between 53.4 and 50.9k. The common target for your wave B is between 54.4 and 50k, which is the 382 to the 0.886. As you can see, we have just missed out on hitting the 0.382, and it is very rare for price to end, so in other words, to end wave 2 or B at the low here, while not touching at least the 0.382. Of course, it's not impossible, but probability-wise, you prefer to see price move into the fibs here before continuation to the upside in a wave C or a wave 3. So therefore, the highest probability locally would still be for price to find a retracement towards the fibs over here in either a zigzag A, B, C, and then a move up, or what's also very interesting, a flat structure, and then a wave A, 3 wave B, and a 5 wave C towards the downside, towards support, which is the blue box here as well, 52.3k to 52.9k. The most important resistance, as mentioned earlier, sits above us here, 58.8 to 60k. If price can pass this resistance, the probabilities do increase for continuation to the upside. Locally, price has now touched the 886 Fibonacci taken from this high to the low over here. This is important because it decreases the probabilities for very bearish scenarios where this is a wave 1, 2 and a wave 3, because again the 886 is rare for a wave 2, common for a wave B or a wave X, increasing the probabilities that any move to the downside is a wave C or a wave Y, which in turn increases the probabilities to move up after and take out the highs over here. If price, however, moves to the upside just ever so slightly, then it hits the invalidation at 57.7k, which automatically then, removes this scenario from my chart. If we look at the CVD divergences, then we have bullish CVD divergences here, higher low on price, lower low on the CVD. The target would be this high. As price has been moving towards the upside, we had consistent bullish CVD divergences. All of these have played out. Some of the bearish CVDs here also played out. You can see lower high on price. We had a higher high on the CVD. A check mark here means it played out. The X means invalidated. And the question marks means we don't yet know, right? This template, by the way, is now officially shared. Check out the Discord channel, Koen's Updates, the YouTube channel community post area on the homepage, or in Telegram, my recent message, right? So if we then finally look at the probabilities of the different scenarios, then on the weekly time frame, the probabilities are highest for the bullish scenario compared to the bearish scenarios. On the weekly time frame, the probabilities where we are looking for a wave 4 and then a 5 up are higher than any bearish trend bear market scenario to the downside, moving below 38k with the information that we have at the moment. On the daily time frame, also the bullish scenario has a higher probability compared to the bearish scenario, so a 3-wave corrective structure to the downside compared to an impulsive structure to the downside, where you can see the target area for C, which has been hit over here. On the 1-hour time frame, the probabilities are highest for an ABC or a 1, 2, 3 towards the upside. Of course, preferably though, we would like to see price move down into the box. That's usually the highest probabilities. But if we do pass the resistance above us, probabilities do increase for continuation. But on the 1 hour, a 1, 2, 3 or ABC is the highest probability scenario compared to an impulse to the downside, 1, 2 and a very big 3, because we also hit the 886 here. On the 15-minute, which pretty much is the same area that we're looking at, but the probabilities are higher to look for a corrective structure to still move down into 2 or B, either a zigzag A, B, C or a flat A, B, hit the resistance, and then a wave C towards the downside. As mentioned, if we do move above this resistance over here, the probabilities do increase to continue towards the upside. And then on the number 3 spot, lowest probability is that impulse down, 1, 2, 3, 4 down to new lows. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.